In this video, I'm going to show you how a student needed to have approached question number 2B in the subject Basic Finance as examined in June 2025. This is the Zambia Institute of Marketing, June 2025, question number 2B. Question number 2A required students to prepare this, which is a statement of profit or loss. If you have not seen this video, I'm going to include the link to this particular video in the description for you to be able to follow through. It is important that you first follow through how this was done, because without this information, you will not be able to complete part B, which required students to prepare the statement of financial position. As usual, we always start by indicating the name, and this is for Chimuka. Always start by indicating the name, and this is for Chimuka. We are preparing the statement of financial position. The statement of financial position as at December 2024. As at December 2024. When dealing with the statement of financial position, you are basically going to be looking at your assets. Okay, you are going to be looking at your assets, and so indicate that you are looking at your assets. Now, what are the assets? Not only assets, but there's assets, liabilities, and equity. But let's start with assets. Okay, we start with assets. So we need to list our assets. What are our assets, and where do we get this information? We check the trial balance. The assets are indicated there. So let's go to the trial balance, and this is in the description. If you're watching this video on YouTube, it's in the description. The assets are, number one, when you look at the information in the trial balance, let's see which ones here are our assets. There's motor vehicle. Motor vehicle. Tina motoka. Motor vehicle. And how much for the motor vehicle? The worth for the motor vehicle, we've been told, was how much? 157,000. 157,000. Good. We've taken note of that. What else? There's office equipment. Okay? Office equipment. These are assets. Office equipment. And what's the value for the office equipment? The value for the office equipment is 60,000. Okay. Do we have any other assets? Do we have any other assets? Yes. We have got trade receivables. Trade receivables. Okay, trade receivables. Yeah, like this. I think this is a spelling. Trade receivables. What's the value for the trade receivables? It is 18,000. 18,700. Good. 18,700. Is that it? No. Here is the issue here. This is, yes, this was the value for the motor vehicle. But this motor vehicle, the value, it depreciates. Remember, we calculated the depreciation for the motor vehicle here. And so we need to less depreciation. Okay? Less depreciation of what? Motor vehicle. Less depreciation of what? Motor vehicle. Like this. Okay, let me just move this so that it is well presented. And how much is that particular depreciation? Okay, we'll just do that. Motor vehicle, that's the amount. There's also depreciation of office equipment. It's here. There's also depreciation of office equipment. So we're going to less depreciation. Less depreciation of what? Office equipment. Office equipment. And what's the depreciation value for the office equipment? Okay, the depreciation value for the office equipment, remember, it's here. 15,000. So we'll add it there. Is that it? Is this it? Our assets, is that all? The answer is no. The answer is no. You also have to include inventory. You also have to include inventory where that is given. Where that is given, inventory. And which inventory in this particular case? The closing stock. The 24,400. So we'll put here 24,400. The inventory needs to be included. Is that it? No. We also need to include prepayments. Okay? Prepayments. In this particular case, prepayments. Do we have any prepayment? Yes. We had prepayment for what? For lighting here. This prepayment. So the prepayment of what? 2600. That's worth the value of the prepayment. Okay. So let's add these together. What does it give us? We add these together. What does it give us? Okay. We'll put the value right over here. This is the value of our assets. All right. This is the value for our assets. So total assets, let's say total assets. Okay. Value for total assets. How about liabilities? Liabilities. Okay. Liabilities in this particular case, we go back to the trial balance. We check what has been listed as a liability. We go through and we'll discover that we have trade payables. Trade payables are a liability. It means that we enjoy the service, but we're yet to pay for it. So we have to include that, indicate that as a liability. And what's the value for trade payables? It is 43600. 43600. All right. What else? We have a bank overdraft. Bank overdraft. Okay, we got more money from the bank. And how much is that? Bank overdraft, we've been told it's 16200. 16200. Is that it? Is that it? I don't think so. And no. Why? Because we have got accruals. Okay, we have got accruals. Accruals, remember? This one. How much? 14800. 14800. This should give us our total liability. This should give us our total liabilities. Okay, liabilities. All right, what does this give us? We just simply add these ones. Okay, we add these ones. Put them together. And they give us this amount. 74600. 74600. Okay, now let's turn to equity. Okay, equity. And under equity, what do we look at? We look at capital. Under equity, we're looking at capital. How much was our capital? Our capital, that information is given in the trial balance, and our capital is 79800. 79800. Okay? Capital, you add net profit. Okay? Add net profit. Add net profit. And the value for our net profit, remember we found it here. That's the one. Okay, then we less drawings. Less drawings. Okay, we were told from the trial balance that the value for drawings is how much? The value for drawings, let's see, there must be drawings somewhere. And the value for drawings is 15300. 15300. How much does this give us together? Okay, how much does this give us? If we add these ones like that, it gives us this amount, 143,900. 143,900. Are we done? Yes, but you always need to check and apply the accounting equation. The accounting equation is that assets is equal to capital plus liability, meaning this value here, when we add this one and this one, it should give us this. If when we add this and this, it does not give us this, then there is something wrong. So when we get this value here for total liabilities and we add it to this particular value, what does it give us? Okay, when we add this to this, does it give us this? Just for purposes of making it easy, I'm going to put the sum of this and this, okay? The sum of this and this, let's put it here. Okay, so sum, or basically I could simply do this, okay, this one plus this one. So you see, the sum of the total liabilities and equity, this plus this, gives us this. It means that there is something wrong. It means that there is something wrong. And you need to correct it. You need to correct it. How can that be done? Let me show you. It is always important to go through each of the entries that you've made whenever the values, like in this particular case, when we apply the accounting equation, these two are supposed to be equal, but they are not. So remember, this is a sign that you have got it wrong somewhere. Be encouraged. Don't give up when you have made one mistake. It's okay to make mistakes. You will still be given marks for the entries that are correct. So instead of letting it go completely, always make sure you do your best. So remember, what are we trying to do? We want the value of total liabilities, in this case, this one, and the value here of our equity to be equal to the value of our total assets. But for now, when we add, okay, and this is how we came up with this one here, we put it here just for convenience purposes. I'll remove it. And how did I put it there? I simply took the total liabilities, this one, and added to this one, and it gives me this amount. Okay, it gives me this amount. Does it? Does it give me this amount? Yes, it gives me this amount. It means that there's something wrong. There is something wrong. Let's try to rectify this together. We have motor vehicle, that's the value. Office equipment, that's the value. Trade receivables, this is the value. Less depreciation, yes. Look at this one. There's a problem here. Less depreciation for office equipment, but this is supposed to be a negative value, not a positive value, because if it's less, it means that we're subtracting. So this is supposed to be less 15000. Okay? That's one of the mistakes that was made. It's supposed to be less 15000. Okay, cool. But they're still not balancing. They're still not balancing. Okay. Total assets, okay. Liabilities are okay. Trade payables, bank overdraft, accruals, the same. Total liabilities, nothing wrong with liabilities. Equity, we have capital, okay. We have net profit, which is okay. Then we have less drawings, which is not okay. Because it's less, we're supposed to subtract this, not add it, okay. We're supposed to subtract this and not add it. So what we're going to do simply, so what I'm going to do is simply, instead of 15,300, this is supposed to be less 15300. Supposed to be less 15300, which changes the difference now. The difference now comes to this one. So why is this one and this one different? What really is the difference here? What is the main issue? I need you to look at the past exam question paper again, and I need you to look at the trial balance as is given in the description, or if you have a hard copy of the actual question paper or the soft copy. There is what is referred to as provision for bad debt. Provision, not for bad debt, but provision for depreciation. There is provision for depreciation. And we are given two values for the provision of depreciation. We've been told that there is 31,400 for the motor vehicle and 15,000 flat for office equipment. When we add these two together, what do they give us? Here's a calculator. It was 31400. This is the provision for depreciation for the motor vehicle plus 15000. This gives us 46400. 46400. Let me put that 46400 here. 46400 minus 46400 minus 46400. And there it is. It now balances. It now balances. Total assets is 187,900. And then when you add the total liabilities plus total equity, it gives us 187,900. At this point, then you know that both your statements are correct. Your statement of profit or loss and also your statement of financial position. Remove this here. We're going to remove this here. Okay. And this would be our work, and we would submit and we would get it right. I must mention, however, that there's a way in which you must be able to present this particular information. I've taken the simplest of routes. Okay, I've taken the simplest of routes. However, you may need to categorize your assets, for example, as to whether they are current assets or non-current assets. And you may need to do the same for liabilities. In a different video, I could show you how that is done, or better still, join my classes. That's it. 20 marks.